Hello, good evening. My name is Erica Belay, and I am a mortgage loan officer with Best Life Mortgage. We are a brokerage, so that means that um, I work for my clients, and we have access to about 20 different lenders. So I can shop for, the best rates, the best terms for my clients. I live in Central Texas. I do most of my business between San Antonio and Austin. I live in Kyle, Texas, and I'm here tonight to talk about the VA home loan. And so this is an excellent loan. It is a great way to thank a veteran for your service to get you into a zero down payment. So with a VA loan, there is no down payment required to use a VA loan. But tonight I'm gonna talk about some of the myths that are associated with the VA loan. I'm also going to talk about some of the truths. And I think VA loans in the past had a bad rap because of there was a thought that the appraisal took longer or that the seller would have to pay for so much of the closing costs, all these different things that are just are not true about the VA loan. So I'm going to talk about that. So the aim of this is to really present these truths and just help you understand a little bit more about the VA loan and why it is just such. It really is a great product for our veterans and a great loan that typically has better interest rates than a conventional loan and better terms for our veteran. No mortgage insurance. So those are some of the great things. But let's hop into to some different things about the loan in general. The first thing I'm going to talk about is what are mortgage closing costs. So, in every single mortgage, if you're utilizing a lender to finance the purchase of a real estate property, it's not free. So, there are closing costs. And so, even when we say zero down payment, you are still expected, the veterans are still expected, the buyer is still expected to pay closing costs. This is something that comes up a lot when I talk to first-time home buyers. So not necessarily veterans, just any first-time home buyers. They think all they need is a down payment. But there are some closing costs associated with purchasing a home. Now, right now, it is early March in 2022. It is a seller's market. It is a seller's market. There is not a lot of inventory out there right now. And so there was a time in the past when the market was a little bit different, when it's a buyer's market, that sellers would offer a lot of concessions. And so I have some veteran borrowers that have said, I've never had to pay any closing costs, or I've never had, I don't have to pay my down payment, but I didn't have to pay closing costs because the sellers always covered that. Well, that's not necessarily happening now. Anytime you purchase a home, there will be closing costs. There are closing costs that the borrower pays. The borrower pays the down payment, the closing costs. There are closing costs that the seller pays. And these are fees from the lender. They're fees from third-party service providers that are needed to get the home loan approved. These could be title company fees. These are prepaid escrows. There's a lot of different things that go into closing costs. So with any loan program, whether it's a VA loan, a conventional loan, any FHA loan, USDA, or any of my non-conventional, we call them non-QM products, there's going to be closing costs. Now, with any loan program, the closing costs and fees should all be outlined to you in disclosures. So the initial disclosure that you get out is the loan estimate. And then there's also like your final closing disclosure. So all of these fees should be disclosed to you throughout the home buying process. And depending on the loan or the program that's being used, in the sales contract, the sales contract is a transaction where both the buyer and the seller may be subject to all these different closing costs. And a lot of that is lined up in the sales contract, what the buyer is going to cover, what the seller is going to cover. And these closing costs typically range from anywhere from 3 to 6% of the loan amount. So just to put that in perspective, a loan amount of 300,000, which is at least here in Central Texas, that's a probably good average purchase price for a home right now. It's 300,000. The closing costs at 3 to 6% for a $300,000 loan amount is anywhere from $9,000 to $18,000. Closing costs, like I said, can be the origination charges, the services. Now, there's services that the borrower cannot shop for. For instance, the appraisal. Borrower cannot choose who their appraiser is and cannot choose the appraisal rate. The appraiser is just going to be assigned, and the borrower, if you want to buy a home, you have to pay for that appraisal. Your credit report. Borrower can't choose credit report. The lender decides what credit company they're purchasing that credit report from. But there are services that the borrower can shop for, such as title company. You can choose which title company you want to use. You can choose which insurance company you want to use for your homeowner's insurance. So that's going to affect the price of your homeowner's insurance. And then there are like your government fees, like your prepaids, your initial escrow. That's what you put. Your escrow is the money that you pay into every month that will pay your property taxes and your homeowner's insurance. So when you purchase a house, your closing costs, part of that is to put money up front into that initial escrow, so that there's money in there to pay taxes and insurance later. There are times in which the buyer's closing costs can be negotiated to be paid by the seller. And like I said, in times when it was a buyer's market, that was something that was happening a lot more often. But right now in this seller's market, that doesn't traditionally happen too much. And so it depends greatly upon the transaction, the market, on whether the seller is going to cover some of the buyer's closing costs. Some loan programs will even allow you to roll some of the closing costs into the loan amount. So there's a lot of different things associated with closing costs. Now, just like any other home loan program, the VA loan will have closing costs, but there are some differences with the VA loan closing costs. In general, the closing costs for a VA loan will be less than other home loan programs. They're typically anywhere from 3 to 5% instead of 3 to 6%. For the origination charges, so that's the lender is allowed to charge up to 1% of the loan amount to cover the origination charge. So there is a max on that origination charge that the lender can charge for a VA loan. So it could tend to be a less expensive loan, which would be less closing costs for our veterans. And that 1% would cover processing, would cover underwriting costs. And then the main difference is that the VA loan program limits what the buyer pays in closing. And there are some fees that a veteran buyer with a VA loan is not allowed to pay for. So the VA home loan program does have a requirement that the seller can't pay more than 4% of the total home loan amount in seller's concessions. So like I said, in the past, a lot of sellers or buyers were negotiating that the seller paid for this full 4% in seller concessions. And so I think a lot of times sellers are under the impression that they have to pay those closing costs. And like I said, in this market, that's just not happening as often. And sellers don't have to pay the full 4% that is allowed in a VA home loan transaction. But what things does the seller have to pay for? What fees in the closing costs are part of what the seller has to pay for? First off, the fees of the closing costs that the seller would pay, are, like I said, are known as seller concessions. There's a list of fees that the seller must pay for. That is the real estate professionals brokerage. For the real estate professionals, their brokerage fees and a termite inspection report. So in most transactions that I see, the seller pays the real estate professionals commissions. That's happening most of the time anyway. although it is something that could be negotiated in the buyer contract in other types of loans that the buyer might pay their buyer's agent commissions. But in a VA transaction, the seller is expected to pay the commissions for both of the real estate professionals, the brokerage fee, and the termite report. Those are the only things that are required. Everything else can be negotiated in the purchase contract. Even though the seller would have to pay for a termite inspection, it doesn't necessarily mean that you would have to pay for any repairs that are associated with the inspection or any repairs that may have been brought up from an inspection that was just purchased during the option period. It does, just because there's repairs that need to be made, it does not necessarily mean that the seller has to pay for those. The seller does just have to pay for that termite inspection. So we mentioned the inspection, but now what is the appraisal? What's the difference between the appraisal and the inspection? Well, the VA home loan appraisal assesses the value and the condition of the property by an independent VA appraiser. Just like any other home loan program, an appraisal is required for every purchase and some refinances. So the main purpose of the VA appraisal is to give a professional opinion on the value of the real estate and make clear that the real estate is safe and sound for the buyer to live in and for the lender to finance. So the VA appraiser will be comparing the condition of the real estate with the minimum property requirements, also known as MPRs. And unlike an appraisal, so the appraisal is basically just assessing the value. It's making sure that the home is livable, that it's in a good condition for our veteran borrowers, and it's a good home for the lender to lend on. Now, unlike the appraisal, the inspection is not required. Most buyers choose to have an inspection. The inspection really digs a little bit deeper. An inspection does not tell the value of the real estate like an appraisal does. The inspection is usually very useful to the buyer because it gives the buyer a more in-depth view of the condition of the real estate. And so this inspection is usually happening during your option period. Once that offer is accepted, the sales contract's been given to the lender, the mortgage broker. The appraisal is usually ordered right away or at the end of the option period. But the inspection is usually ordered, so it happens during that option period, so the buyer can make some decisions based on that inspection. If the buyer were to want to pay for an overall inspection of the real estate, like I said, that would happen before the end of the option period. But anything that comes up in the inspection does not necessarily need to be paid for by the seller. So what does the process of the VA appraisal look like? Now, this is one of those things in the past, the VA appraisal was thought to just be slower and be more stringent and just take too long, but that's not really the case anymore. In general, we have a shortage of appraisers everywhere. So the appraisal process for a VA loan is no different really than for a conventional or an FHA loan. They're all taking anywhere probably from up to 2 weeks typically. So once the loan officer has received the go-ahead to get the appraisal ordered, it is up to the buyer to pay for that appraisal. Appraisals are paid for upfront. The cost of the appraisal varies depending on your geographical region, what your local market looks like, but it could cost anywhere from $550 to $900. I've actually seen appraisals even cost a little bit more than that. So the appraisal is paid for upfront, and then once a VA appraisal has been requested and an appraiser is assigned, on average, like I said, it takes about 2 weeks for the appraiser to compile. What they do is they inspect the property, they compile comparable sales and the property condition. I'm sorry, no, it's a live stream. My dog is scratching to get out. So pause for a second. Okay, sorry about that. So the appraiser is going to look at the comparable sales, the recent comparable sales, the property condition, and all of that is going to be uploaded into the VA's secure web portal. At this time, so it takes about 2 weeks. It could take less for that report to come in. But once the appraisal is received, the lender's staff appraisal reviewer, also known as a SAR, will go review the report and will give a final say in the value of the real estate and confirm that the property meets the guidelines of the VA loan program. The staff appraisal reviewer is also able to request any sort of clarification and correction from the appraiser. So the SAR issues the final appraised value of the real estate. This is known as the Notice of Value, or NOV. The NOV can also list any issues or repairs that need to be fixed. Now, the minimum property requirements, also known as the MPRs. These will be some of the major MPRs to look out for. The first is, for a VA loan, it has to be a residential property only. So only residential properties are eligible for VA lender financing. There can be no lead-based paint. So any properties that were built before 1978, if there is flaking paint, it's going to be assumed that that is lead-based paint. And in that case, the paint must be scraped and repainted to cover the drywall. There can be no termites. Depending on the area, a termite inspection may be required. And there can be no defective construction. For example, evidence of decay, poor workmanship, anything like that. We don't want our veteran borrowers getting into homes that are not really safe and not built well. And so there can't be any health or safety hazards with the property. And property access is another one. It must have safe access from the street. Any basements or crawl spaces must be problem-free, and roofing has to be in good shape. And provide a reasonable future utility. So for water availability, the home must have a safe water supply, a water heater, and a safe method of sewage disposal. And then the heating must be adequate. The heating system must be safe and capable of keeping the real estate's living space temperature above 50 degrees Fahrenheit. And all mechanical systems must be usable and safe. This won't include any minor problems that won't impede the operation of the mechanical systems. And then the property must have adequate living space, containing enough space for the basic functions of daily life. So once again, this list of MPRs won't include everything to look out for, but just because it does depend on the geographical location and local requirements placed upon the residential real estate as well. But in general, the VA appraisal is just looking for a clean, safe, functional home for our VA veteran borrowers. Now, possible appraisal challenges. So let's cover some of the two obstacles that may keep a property from meeting lending and loan program requirements. The first is if the appraisal comes in below the loan amount. There isn't much that can be done if this occurs, but there are a few options that can be taken depending on the different factors. So if the appraisal comes in lower than the price, the buyer can seek a reconsideration of value. So to do this, recent comparable home sales would have to be provided that weren't originally used in the appraisal report. The other thing is that the buyer could just make up the cash difference. So we say that a VA loan is a 0% down payment loan, but the VA will only allow up to the loan to be up to the appraised amount. So if your purchase price is higher than the appraised value, then the buyer could choose to come up with that difference in down payment. If these options aren't able to save the transaction, then the buyer and the seller might just have to walk away from the transaction. The second obstacle that may occur with the VA appraisal is that repairs may be necessary to meet the minimum property requirements. So for this one, there are three options. One, the seller could complete the repairs. Two, the buyer could complete the repairs, or the buyer and seller could walk away from the transaction. So as I said before, the myths associated with this, and I think it's unfortunate that sometimes sellers might not want to consider a VA loan, a VA offer, because they might be fearful of the VA loan because of some of these things. But really, the only thing that the seller is responsible for are the real estate commissions, which is typically happening in most transactions, and that termite fee. In other cases, the seller can choose and negotiate with the buyer and could pay some of the closing costs, but they don't have to. In the case of some of these appraisal challenges, the seller could pay for the repairs, but doesn't necessarily have to. All of these are part of the transaction that are negotiated between the buyer and the seller with the help of the real estate agents. So I hope that clarified some of the things. The one thing I hate to see people not consider the VA loan. The VA loan has some of the lowest default rates of any loan program out there. They are great loans. It is a great way for our veterans to purchase homes. And so I hope that our sellers out there are taking into strong consideration these VA offers, because they are solid offers. And so just don't be scared of this appraisal process or the VA loan process, because it really is a great transaction. So anyway, if you are looking to get a VA loan, or really any loan, just make sure that you are always choosing a loan officer that's going to listen and understand your situation, and really just help lead you to make a very informed decision. So this is something that I pride myself in with all of my buyers, is that in borrowers who might be refinancing, anything like that, is that I want to get a clear picture of what your goals are, what your finances are, what payments you're comfortable with, so that I can help you make the most informed decision about the financing and the level of house that you can afford. And so just to talk a little bit more about my company, talked a little bit in the beginning that Best Life Mortgage is a brokerage. We have access to about 20 different lenders who offer all different kinds of products: VA loans, conventional loans, FHA, USDA, and then I also have a bunch of what we call non-QM products that are that don't meet, buyers who might not meet conventional VA or USDA guidelines. We have some different programs for you, but really our mission is just to help everybody achieve their best life. We do that by providing first-class client service and financing experience. We want to empower everybody around us to live with a growth mindset. And we are a tithing company. We give 10% of our corporate profits to liberate kids from the shackles of human trafficking. And we do that through a partnership with a company called Destiny Rescue, who just does some amazing things they do some covert operations to go undercover and save kids from these horrible situations, and then also do some counseling, some rehabilitation, some job training to help these kids who have been victims of human trafficking lead their best life. So we would love for you to be a part of our mission. Every 7 loans that we close through Best Life Mortgage saves a child. So please reach out if you have any questions on VA loans, on any type of home financing. I would love to be a resource for you. Here is let's see. Yeah, there's all my contact information: 210-279-4392. You can email me at ericabelay@bestlifemortgage.com, or just shoot me a message in the chat. We're streaming on Facebook, LinkedIn, and on YouTube. So this stream is always available to watch later. But please reach out. Everybody, thank you so much, veterans, for all that you are doing and for your service to our country. Have a great evening.